Imagine someone hands you the keys to a Formula One car. Like the door is unlocked, you have a standard driver's license, so you just get in.
Right, which sounds great until you actually try to drive it.
Exactly. Knowing how to turn the key doesn't mean you know how to survive the very first corner. And honestly, that is exactly what happens when beginners log into modern CFD trading platforms.
Oh, absolutely. It is a huge trap.
So we are diving deep into the realities of these platforms today. We really want to answer a vital question for you. Can beginners successfully navigate this space without getting completely overwhelmed? Or is all this easy accessibility actually a huge problem?
Well, the temptation to just jump right in is massive. I mean, these platforms aggregate Forex, crypto, indices, gold, all on one incredibly slick dashboard.
Yeah, it always looks so clean and inviting.
It does, and the friction of execution is completely gone. Clicking a button is just, effortless now. But the market complexity hiding behind that user interface, that hasn't changed at all.
But wait, if a professional-grade platform lets me click buy in milliseconds and executes it flawlessly, doesn't that incredibly smooth experience imply I am ready to trade?
See, that is where people get confused. It implies the system is built for you to act quickly. But there is a massive distinction between accessibility and simplicity.
Right.
The interface makes executing a trade easy, sure, but it definitely doesn't make the actual decision-making any easier.
Yeah, the execution is frictionless, but the market is definitely not.
Yeah.
I mean, once that trade goes live, beginners get completely blindsided by how fast the market actually moves against them.
Especially during big news events, things flip so incredibly fast.
Exactly. And then you have leverage magnifying every single tick.
Leverage is the real catalyst here. It changes the scale of every single decision. It magnifies a tiny 1% market move into this massive financial swing.
Which is terrifying for a new trader.
Oh, it is. And that sudden financial pressure triggers the real danger, which is human psychology. When you see red numbers flashing on the screen, your brain's logical planning center just shuts down.
Yeah, emotional survival instincts totally take over. But wait, if a beginner has a solid, well-researched strategy mapped out beforehand, shouldn't that logic override their psychological panic?
Well, you're assuming people remain rational when they are actively losing money.
Ah, fair point.
I mean, look at revenge trading. A trader logs in planning to risk just 1% of their account, but then they hit a losing streak, the stress spikes, and suddenly they completely abandon the math.
Right, they start risking 3 or 4% on a single trade just to win it back.
Exactly, just to recover those losses faster. The strategy completely breaks down, so it is a discipline problem, not a knowledge one.
So, if leverage and our own panic responses are the main traps here, how do beginners structurally protect themselves from their own bad habits? What is the baseline survival toolkit?
You basically have to build mathematical walls around your own psychology. That means knowing your order types, specifically hard stop losses, and strictly controlling your position sizing.
Because if leverage amplifies the losses, keeping the position size small is your primary defense.
Exactly. By hard-coding a rule where you only risk 1% per trade, even a complete wipeout on a volatile day is contained, and a stop loss enforces that automatically.
It takes the decision right out of your hands before you even have a chance to panic.
Yep. And you really need to stick to reading basic support and resistance. Stick to one market and one specific setup. Familiarity beats variety every single time your money is on the line.
It is like learning to cook. You have to master one signature dish before trying to run a 5-station buffet.
That is a great way to put it. And honestly, the most underrated skill from the text is actually knowing when not to trade.
Oh, wow. Yeah, because the platform is open around the clock, you feel this pressure to always be doing something.
Exactly. But sitting on your hands is an active strategic position. Patience is a skill.
Which brings us to the ultimate beginner trade-off. You really cannot have both fast progress and low stress.
No, you definitely can't.
True progress means treating trading as a specialized skill, keeping your position sizes microscopic, and taking demo accounts seriously to build muscle memory. And flexible, modern brokerage ecosystems like Monaxa are built to support that structured approach.
Right, you need to use those tools to start simple and build discipline. Prove you can stay controlled enough to still have capital when a real opportunity shows up.
Exactly. So I will leave you with this final thought to mull over. If modern platforms are intentionally built to make executing trades as fast and frictionless as possible, are those slick interfaces subtly discouraging the very patience, friction, and hesitation that actually keeps a beginner safe?
That is a fascinating question.
Right. Sometimes before you start the engine of that Formula One car, The smartest thing you can do is just sit there and study the track.